Okay, welcome back to my channel. Let's talk about this distinction between the capital expenditure and the revenue expenditure. Before you build the financials, that is the income statement, the balance sheet or statement of financial position, you need to know the difference between capital expenditure and the revenue expenditure. Okay, what is the revenue expenditure? Revenue expenditure is the cost of meeting the day-to-day needs of the business. Okay, for instance, if you pay for utilities, water, electricity, fuel, rentals, all that will fall under what? Revenue expenditure. And it is this revenue expenditure which will go to the income statement or statement of profit and loss. And then on the capital expenditure, this is the expenditure or the cost you incur when you purchase long-term assets or fixed assets. For instance, if you buy a motor vehicle, office furniture, office equipment, all those, they fall under what? Capital expenditure. And it is this capital expenditure which goes to the balance sheet or the statement of financial position. So let's go again to the key difference. So long-term acquisition or improvement, this is what? Capital expenditure. And also the day-to-day operational expenses, if you spend to meet the day-to-day operational expenses, this is what we call revenue expenditure. And it is this key difference which will help you to build the income statement and the balance sheet. Right, so let's look at the transactions. We have 6 transactions here, so we need to classify these transactions into whether they are a revenue expenditure or capital expenditure. Right, so purchase of a delivery van for 80,000. So the question to ask here is, how long are we going to stay with the van? We're going to stay with the van for more than what? A year. So this one is a long-term what? Asset. So this one will be what? In short, I'll just say, right, as capex. So that is what? Capital expenditure. Okay. And then let's go to payment of electricity bill for the factory amounting to $1,500. So electricity bill, that's part of utilities, day-to-day expenses, or it's the cost that meets the needs for the day-to-day that cost that meets the day-to-day needs of the organization or the company. So this is what? Operating expenditure, OPEX. And then repair work done on office furniture costing 500. So this again is what? Operating expenditure, that is for the day-to-day expenses of the organization. Then we're talking about construction of a warehouse on a company-owned land for 250,000. The clue can also be on the amount, right? So 250,000, you are constructing a warehouse. So this warehouse is a long-term asset or a fixed asset. We are going to stay with this asset for more than what? More than 12 months. So this is what? Capex, capital expenditure. And then we have monthly salary paid to employees totaling 25,000. So salaries, this is what? Day-to-day, it is a cost that we pay to meet the day-to-day needs of the organization. Okay, the organization cannot run without the wages and salaries or employees. So this again is what? OPEX. And lastly, we're talking about installation of a new software to improve production processes for 12,000. So this new software, the assumption is we'll have it for more than what? 12 months. All right. So yes, the assumption is that we'll have the new software for more than what? For more than 12 months. So this is also what? Capex. All right. So that's how That's how you differentiate these two terms, capital expenditure and revenue expenditure. So capital expenditure will go to the balance sheet under assets, or and under the same assets, it will be under non-current assets. And then the revenue expenditure will go under that, the income statement or the statement of profit and loss. Thank you for your time. Bye bye.